team.
All right, ladies and gentlemen, welcome back. We got another chart talk coming at you. It is Wednesday, January 17th, 2:17 on the East Coast, 11:17 out here on the West Coast. And we got a market that's cooling off a bit. Eight of the last 9 weeks have been green. We've been in this hyper uptrend. We've seen semiconductor stocks really take the lead, but we've seen a lot of tech stocks. And hold on, I gotta buy some more of this arm. We'll talk about that a little bit. We saw a lot of tech rallying and things like that. And now we're seeing signs that things might be slowing down a bit. And we'll get into those cues about what it's kind of telling us and what we kind of think in the near future. I personally think we have a very choppy January ahead of us. Seasonality is very negative. We're finally seeing the 10-year tick up. We're seeing the US dollar tick up. We'll talk about that in a minute, though. You want to get into any charts over there?
So I think you touched on a lot. Again, sector-wise, there is an example. Let me share my screen for a second. I think it was just a good visual example. So we've been talking about the 10-year. We're talking about the broad market, and this material sector. In my opinion, just gave a very good example of a very simple example of the market. So end of the year, we had this market rally into new highs. We got near 52-week highs, all-time highs in most major markets, major sectors, and the expectation was that to continue. And that's what I have max greed, and it highlighted in red because that's simply the time you want to take some profits and kind of be patient. Where when things looked the worst, back in the end of October when we were in a technical correction, no one was thinking we're going to go back to highs. That was the scariest time, but the best time to buy. But now with materials starting to pull back in, this is the start of those more difficult, choppy environments that we don't want to rush into, where if you have those few good months, which we've had, if there's a month or two where the market's going to be choppy, it's not the time to be going balls to the wall, looking for opportunities day in and day out, because it's just that grinding pullback. And that's kind of what we see in the material sector, ticked 52-week highs, and it's just that slow, methodical pullback. And we're seeing that in a lot of the other sectors. So it's just, being more patient, being more selective with what we've been doing. And I think even to your point later about some of your trades for last week, it was, simply that, very selective, not spreading yourself all over the place, just being very focused on what you're looking at. So that's just my little take, trying to use this materials example as just a broader example of what's going on in the market.
Cool. Let me see that. All right. Yeah, so like I was saying, I got the S&P up right here. You can see it, Ben?
Mm-hmm.
All right, so I got the S&P up, and we went on this crazy run to end the year. And then we began this year in this kind of chop phase. And then what are the other things that were risk factors to the market? Well, we saw the 10-year. Here's what happened. The 10-year was on this steep downtrend. We loved it. It let the market rally 7 of 8 weeks to end the year. Probably one of the greatest, November, Decembers in history. I don't know. But since then, as the S&P is running out of juice, after a huge run, we're seeing the 10-year break this downtrend, and it came down, back tested the channel, and launched higher off of it. So, that's it's not as much a risk off indicator. It's like a risk, it's not balls to walls risk anymore, and it has been up until this point. There was just signals upon signals about why the market should go higher, and now we're seeing that cool off a bit. And the second thing is this dollar, the US dollar. So again, is in a downtrend here. And then how it breaks these downtrends, it flags out for a little bit, and now we're getting that secondary move higher. And if you notice, here's the last high in the US dollar. It's November 1st. Okay, let's go to the S&P. Here's the last low of the S&P. It's October 27th, 3 trading days before that low. So these aren't one-to-one, indicators, but it's just something to keep in the back of your mind. The dollar's ripping, so it's not good for US equities. It makes, stocks valued less, theoretically. So it's only common sense that, that puts pressure on equities. So while the dollar's ripping, while the 10-year is, just beginning to rip, while the S&P is beginning to cool off, and while we're in this time of January, which is seasonality or the third week of January, one of the weakest weeks of the year. One of the weakest weeks of the year. Say that one 10 times fast. So we're expecting, a little bit of chop. Then chop is fine. Hold on, I'm trying to add some of this arm right here. We're buying the self-support. I'll go over this live in a second. So listen, it's okay that the market cools off for a bit. So this time we want to be super, super, super selective, and really, really think these trades through. Before November, December, it was, every single setup that matriculates, you want to take that falls into your system because the market's it's firing on all cylinders, and it's telling you with the follow through, it's giving breakouts and things like that. If you have long setups in your system triggering, you got to take them. Right now, we're not seeing those signals as much, so it's time to cool off, peel back the risk, even though the market's pumping right now. Overall, but yeah, so super selective. That's it. That's really the thing. I had a good week last week, so let's go over those trades. And it was really three names it came down to. And I pretty much game planned this trade. I think I talked about it last week's.
Mhm.
It triggered before we did last week's, right?
Mhm.
So here's something I learned something about myself that is really, really included in my edge that I didn't really think of. So something I've been working on over the past few years is like, why can't I hold on to a huge position for the big move? That's always been my like Achilles tendon or whatever you
Mhm.
call it. So this SMCI, and if you listen to last week's chart talk, it was after the 2 days, and I had cut like 40 or 50% of my position. At this point, I was like, listen, it's probably going to tickle these all-time highs in reverse, but I want to hold on to the reversal so I can maximize the trade. So then what it does, it touches this high, takes out this high by a few cents, and sharply reverses. In that moment, looking at where it came from, looking at where the moving average is, I got out of like 95% of my position. And that was the right thing to do.
Mhm.
That's what I learned about myself. It's like I have to take that move into strength because the pullback that ensues, I would have given my whole trade back.
Mhm.
And I can always re-enter if it wants to take that out. But one of my skills is putting huge risk on in really tight areas. So, the entries aren't a problem for me. So for me personally, it's loading up when things get really tight and kicking some into that resistance. So I kicked between 50 the last 75% of my move between 340 and 360 here with the entry of 300 with an 8-point stop. So a very, very good trade. That was the big winner. This Microsoft we were talking about as it was kind of before it triggered. Here's the trade. I was short this day, and this is when the Qs did this, and I was thinking this is might be a continuation bear flag lower. What it ended up being, then I went through charts over the weekend, saw how much strength there was out there. I was like, oh shit, this Microsoft's actually one of the strongest names in the market. I shouldn't be looking to short this. So it takes out the high the next day. I flip that position long, and I get very long. Then I get to add on the breakout here, and I just kick into strength. I don't really have much left. I had such a big week, so I just wanted to book the profit. So that was my second big winner, and then third big winner was this STNG, which I failed to capitalize on today. Oh, nice add in that ARM. Whoo, talk about that one a little bit. So here's something that's becoming one of my most profitable setups, Bennett.
Mhm.
All I've been doing is really, really, really studying my best winners and what they are. And what it is, it's buying off support in extreme uptrends in high beta names, meaning names that move a lot and names that are very strong compared to the broad market. STNG, this is they ship fuel and freight across Atlantic Ocean and whatever, just long distance freight shipping. This sector is really, really hot because of all the different wars going on and things like that across the Middle East, making the cost of shipping very expensive. So these guys are killing it. So I've been watching these names, and I didn't really have a huge bias on them. So coming into this day, I was like, all right, we got a nice little trend on our hand. If I can get stock through this 63.50 area, I have a good trade on my hands. What happens is the next day, everything opens lower. Okay, this day it opens here, pushes lower, comes into contact with the 21-day moving averages and pushes higher. So I buy those new highs. I buy 62.20 for 61.20. I buy 5,000 shares, so $5,000 risk. But my risk is $1. So I need to sell a 5-to-1 trade would be 67.20, right? $5 profit.
Mhm.
I have so much risk on, and we're going into a Friday. And so I'm checking my P&L every second. I wake up at 3 a.m. because that's 6 a.m. on the East Coast. That's when pre-market opens here. I notice this thing is trading up at 67. I start selling this thing. Hold on a
The
second.
price is not even on the chart.
It's not even on the chart. So you see, all right, I'm trying to get the. So here's that. I bought 62.20 versus 61.20 against, that area I told you. So I have this huge gap up based on some bombing in Libya or whatever it was. And I see it's above 67 pre-market. So I'm fucking putting these orders out 500 shares a clip. They're all getting bought. I'm like, Adele's up next to me, and I'm trying to explain. I'm like, dude, I don't know where this dude is in the world, but he is about to get so fucked on this trade. It's like it's funny because it's like a zero sum game where it's like there's some winner and some loser in this situation, and I am buying this stock and he's selling it until 67.10. And I'm like, God, this thing is so overbought so quickly. I get off 2,000 shares pre-market, so I still have 3,000 shares. When it can't make a new high, I just get out of everything below that 66 is my final kick. And look what it did. So then here's where I messed up. Gave me the same trade today. Gave me the same exact trade. Opened up on that 21 day, right in this moving average. It showed that relative strength early. The problem is it ripped up this morning. I actually had bids in around 63, 50 and 60 because my last trade I risked $1. So I wanted to get my size here $1 off these lows. 62.50. I wanted 63.50. Never pulled in. Looks great. Looks like it moves higher and continues on higher. But so those are the three names. I took a loss in the CEG. We were buying off this support level. That was really it for my week. It was just a major focus of let's go. And then now this arm. Let's talk about this arm. This arm was trade of the week. So how I wanted this arm, because we love that 21-day test. So this is where I loved it was coming into the week here. Because it's got such a tight little inflection point. My plan was to buy through 71 against 69. So it keeps pulling back, and then it had this funny pattern on the 30-minute chart, which I'll go over right now. So what was this? Whoa. Oh, I don't even remember. That was small size. But so it's got this very obvious downtrend, right? On the 30-minute chart. And what it's doing is it has this opening 30 minutes, flush it down, goes sideways. Opening 30 minutes, opening hour, goes down, flushes sideways, or goes sideways rest of the day. Same thing. Down, sideways, down, sideways. Today, down, sideways, and up. And it takes out that opening print. So in the beginning of this chart talk, I was saying I'm adding. It's because I see it. So this, in my mind, this opening print of the high is what, 68.30? It's just flagging in front of that. Once it's taken out that 68.30, 68.50 level, that's my signal to get long because it's done something differently than it has every single day since.
Mm-hmm.
So you see it? So now I got a nice little stock and I got a nice little position on my hand. 68.30 against these lows, 66.66. That's scary. But now it's got a clear downtrend. It's breaking on its hand. Now this wants to push up higher. I had great stock on my hand, and that's looking good. And the other thing that's looking good is this DraftKings I bought today. So I messed around with this DraftKings yesterday. I didn't hold on to it because I'm a little worried about the market. But I was noticing that it was the strongest name on the board. And it's holding in there at support. And that's a signal in itself. When the market's pulling in for the first time, the names that are holding strongest, those are the ones we want to be with. So I bought this one today when it took out the previous day's highs, and I kept this one on a tight leash. I was trading to that day's low. Now I have it, pretty much just below my entry. If it gives back this 34, I'll either look to re-enter or something. But I'm not going to hold a loser overnight, especially in this environment. So that DKNG is looking good. Should be good into the Super Bowl. Launch like a rocket. Other than that, very selective in this market. Market just kind of turned up the end of the day, so I'm trying to see did I just miss my buy in SMCI? I don't know. This is why I don't like doing these during the day. Bennett. That's really it. Super selective. Think January is gonna be very choppy. I still want to be involved in the best names. I don't want to be involved in 10 names. I want to be involved in 2, 3 names, 4 names with really, really, really calculated entries, like I explained in that arm, like I explained in that DraftKings. And that's really it. Really, really, really focused entries and exits this year. That's it. What you thinking over there after my 20-minute
I
tirade?
mean, it's all very impressive value. I mean, you had a crazy week. I know feel like you very downplayed the P&L on that, but you had, just very crazy trading, crazy good trading.
Appreciate that. Appreciate that.
Yeah.
I'm trying to take the P&L out of it. I'm trying to
Yeah.
not. I don't. Who cares what people in the chat room think about me? It's my performance at the end of the day, and me reaching the heights that I think I can reach, based on the edge that I've really worked on over the last 10 years. So that's it. That's
No,
it. I don't.
no.
Everything's percentage based for me this year. That's the big difference. It used to be like, all right, I like this trade. I'm going to risk X amount. No, I like this rate. I like this trade this year. Now I'm X percentage, and so I've always said to do that. I've never really, really, really really done it before, and this
Mhm,
year I've really done it, and that's how I got the 100K week because it was like just all percentages.
mhm.
It's all percentages, and then you stop thinking. I'm not clicking on my P&L every second. It's day one stuff, but as you increase the size, it gets more difficult. But I don't know. We're all learning. We're all taking things day at a time here.
Couldn't agree more. So I got two quick ones. One currently is in progress. Hold on. So we got this CB. Again, the financial names have been somewhat strong compared to a lot of the other sectors, maybe, separate to the last day. But little flag up here, looking at a lot of the financial names going into the weekend, and this CB pretty much bull flagging, forming a blue sky breakout. That's when, a name is near its all-time high. It's about to break out. And when it breaks above those highs, it's blue skies because there's no resistance that's above this name. So that's what we kind of even saw that with NVIDIA when it took out those through 500, same, blue sky breakout example. Again, different name, different sector, but this is that blue sky breakout example. NVIDIA couldn't break 500. When it breaks through 500 and closes above it, it's blue skies and trades, 10% plus
Oh,
higher very easily.
how many
So
times in your career have you seen the most obvious trade in the market work out like that? Like that, like
I
that.
honestly, very few,
I
like
can't believe it. I was
we were,
not touching that thing. I knew it was a good setup. I put on the
mm,
shakedown and everything. You couldn't get me to touch out a 10-foot pole and it's up 10% in a week.
it killed it. It went on last Monday and we were doing the pre-market call. And I'm like, this looks great through 500, but I'm like, I can't buy it today. I can't chase it fourth day up into
Right.
resistance. Like it's just a trap. And I
That's what's
like
so, yeah.
30 minutes later, I'm like, oh my God, you goddamn idiot. Cause I was like, we both were watching this for so long. Like this one like hurt a little bit. Um,
Yeah.
but but anyways, this is again the blue sky breakout example is takes those highs. So looking at the financial names going into the week, we're flagging looking somewhat strong compared to most other sectors. This CB financial name looking very strong within the stronger sector, blue sky breakout. So I had that buy step in today, triggered, flush, whatever, 2, 3 points higher. For now, just giving that stop versus prior low a day versus this 226. So, $4 risk, about 1.5% on a very strong chart or some highs. It's a trade I'm willing to risk some money in. This PDD, very similar trade, did not work. And I'm glad, you mentioned how like for like SMCI, like you took the profits when you saw, the information when it got to that retest versus
Yeah.
trying to give back a lot of it. And this PDD, another like lesson I think a lot of traders learn the hard way is like, you try a breakout for, you try it this day, it doesn't work. You try it this day, it doesn't work. Then you move on with the name and then you look back and it does go. And that was like for me with PDD, I'm like, I had to buy it back this next day, but it still couldn't go. So I'm like expecting this breakout through this flag, and it's just getting no, the same like little dojis at highs, it's just giving the information that the breakout just isn't there yet. So I took basically a break even loss. This was what I guess like on Friday, bought the 150, 2 days just kind of flirts around here, doesn't do much, break even trade, and it flushes much lower. And I'm glad I took that break even trade. But I still have this alert set where when this gets back up there again, be it in a week or 2 weeks or 3 weeks, if it's setting back up, I'll have to take the trade again and try to catch that move higher. So I was just kind of sticking with it and then knowing when, the information's not there, you're not getting any breakthrough, not getting any increasing volume through that level. It was just, to take as tiny of a loss as possible. and just focusing on these strong names. So same with the CB. Other than that, again, we both were looking at some of the railroad stocks. You were looking at, I'm looking at CSX.
Yeah,
You were looking
UMP.
at
Oh yeah.
UNP. So again, we're, same thing though here. We're seeing some high and tight flags going into the week. They look good. With some of the weakness, maybe needs to shake out more. But for me, again, I'm just focused on this 35 level in CSX.
Well,
Again,
so
mhm.
right, yeah, yeah, and going into the week, and you see how it reacted to that 35 resistance level. To me, that's huge information and just like foot off the gas, foot
Mhm.
off the gas time.
Yeah.
This is failed break or didn't I don't know whatever you call this failed breakout or just kind of toppy ass pattern.
Mhm.
We're seeing that across the market, so I think January is just gonna be a chop fest. But all right, sounds like we got through it all.
I think we did.
Oh, you want to talk about Disney real quick? Disney looks pretty great.
I mean, I think Disney, like, if you had to pick, if I
Oh,
had
I
to,
didn't see it sold off like that today. God damn.
yeah.
No, it doesn't.
So
Holy shit.
it's like if I had to pick a name, a Dow 30 name for the next year that I think has the best risk reward, I think it would be Disney. I think Disney down here a year out of the other Dow 30 names, probably the best risk reward. Um,
I'm
and it just
very surprised to see it give it all back today.
yeah, I mean,
This one was so strong yesterday in a weak market. The way it was holding the 200-day moving average on the daily on the back test,
mhm.
I thought it was going to be a launch pad and wouldn't really let people in. I mean, I've been hearing people say that Disney support buy for the better part of a year at this
Yeah,
point.
I mean, it's been like almost a 2 year. Like if you really start like this, you know, almost kind of 2 years if you really want to count. Not 2 years. I guess maybe like a year and a half. But this name has just been dead for. Yeah, it's
That's
kind of been 2 years.
a while. Yeah, that's a
It's
while.
kind of so it just
That's a
it's like
while.
even like Etsy kind of gives. It's like when they're this beat up down here, it's like it takes like months. It's not going to really be like one day that's going to really change that composure in the name. Where
Yeah,
even like
yeah.
Etsy's somewhat of an example chart wise, where like it had this. Let me get rid of all these lines. Same thing, like holding dramatically off highs post the COVID run up, and down here, had this this is like a 50% run up in it, but you will still zoom out, and it's still it needs so much more work to really get going, and
2021 was so
I know.
crazy. Etsy was a $300 stock.
I remember I rebalanced some at like it was like under 270, and I'm like, damn, I'm pissed I gave this stock away, and now it's like should have fucking sold
Yo,
it all.
crazy, crazy.
Uh,
I remember I made money. My last trade, one of the last trades is I made money in Upstart.
mhm.
I bought type in UPST on October 12th, 21. I bought 320.
Oh my God.
I bought 320 and I made money and I made mad money. Like it was like the easiest trade if you go on the daily. I bought
Oh,
320 and I sold it too early at 350 and I was pissed. And I was like, I was disgusted with myself.
now it's all, I can't even, it's gonna take like a minute to get back up there.
Yeah, leave that. See that little flag that launched, that last launch to 400?
Uh,
Yeah, I was in that. I sold 350, 360, and I was like, I am such a piker bitch. And then it's like $30 now.
oh God. Yeah, some crazy names. Again, like, even like I'm only talking about Etsy because I sold out of Amazon. This is like I've been in Etsy literally since that time. And I sold out of Amazon back in November because I was up in Amazon and it was like near 52-week highs. And I'm like looking at this Etsy and I'm like, all right, for where Amazon is compared to where Etsy is, I don't see Amazon going another 100% over the next year from now. But picking up Etsy when it looks like dog shit chart wise, from this to go 100% to 120 is a realistic, is a move I can see occurring in the name. So that's like, that was just I rebalance and just happen to get very lucky.
Yeah.
But then it's faded the entire move. So that's like, this reminds me like a lot of like with Disney, it's just going to have these like zooming in, it's like 60 to 90. It's a huge percentage move. But overall, it's still within this like macro pattern that it's still probably still needs to see sub 60 before it really breaks this major downtrend. And I think that's kind of the same thing with Disney. I think it needs even pushing down through lows again, like down through 80 to
I
get
don't
like
think it
that.
needs that.
You don't think so?
No, no, no. I think it holds this 90 area. I mean, even though it looks like shit today, I
Mhm.
don't think it has another trip towards the lows in it. If it does, then I think this I think it breaks that. if it goes back down there, I think it breaks it.
Well,
But I don't.
so I think it needs to really like that would so it's like everyone who's bought this stock since 2020, that's been the line in the sand. Everyone, it's like when we're buying like a stop, buying a name and the support's 100 and like we're like, don't break 100, please don't break 100. It's gonna shake us out. I think it just needs that shakeout, and then
I mean, but it did technically. It broke that low.
yeah, but like by pennies, this really didn't like
Okay.
you know
Yeah. I see what you're saying.
like
Like a
this
real shake.
like a real like almost a 70 like it like
Like
to
if you're a
really.
lifetime holder, you're not gonna have a 78 or 79.99 stop. You're gonna watch. Yeah. I see what you're saying.
Yeah. So that's just my, that's kind of my thoughts. Like again, this is a name where um if that was to happen, like again, like on the upside, if it breaks through 100, I think it wakes back up and you get the move from 100 to 200, but I think it needs that. And we'll see. And it's not like I'm trying to buy it at 80, and I don't think you're trying to rush buy it either ways, but there's just one I just keeping an eye on.
Yeah.
With one eye from a distance, but I think that's really it on our end, on my end.
Yay. All right, market coming back.
All right, guys.
All right, let's wrap this thing up.
I think we're done.
Uh, like, subscribe, blah 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 blah. No, that's this part. All right, all right. Catch you guys next week.